When you buy equipment for your freelance business, a laptop, a camera, software, a microphone, a drone, the IRS has specific rules about how and when you can deduct those costs. And if you know how to use Section 179 and bonus depreciation correctly, you can write off the full cost of that equipment in the year you buy it. Done right, this is one of the most powerful deductions in the tax code for freelancers. Here is how depreciation works for self-employed professionals in 2026. The basic concept of depreciation is straightforward. When you buy a business asset that lasts more than 1 year, the IRS says you cannot deduct the full cost immediately in the normal tax system. You have to spread the deduction out over the useful life of the asset. A computer might get depreciated over 5 years, a piece of commercial equipment over 7 years. Without special rules, you would deduct a fraction of the cost each year. But Congress created 2 tools that let you deduct the full cost much faster, often immediately in the year of purchase. Tool 1 is Section 179. This lets you elect to deduct the full purchase price of qualifying property in the year you place it in service. For 2026, the Section 179 deduction limit is $2,560,000. That is the maximum you can deduct under Section 179 in a single year. As a freelancer, you will almost never come close to that ceiling. The relevant limit for most people is the income limitation. Section 179 is capped at the taxable income from your active businesses. You cannot use Section 179 to create a loss. If you earned $40,000 in net profit and bought $55,000 in equipment, your Section 179 deduction is limited to $40,000. The remaining $15,000 in undeducted basis does not disappear. It carries forward to the next year where you can deduct it subject to that year's income. Tool 2 is bonus depreciation. In 2026, bonus depreciation has been restored to 100% under the One Big Beautiful Budget Act. This means you can deduct the full cost of qualifying property in the year of purchase, just like Section 179. But bonus depreciation has one critical difference from Section 179. It can create a loss. If you spend $55,000 on equipment and only earn $40,000 in profit, you can use bonus depreciation to create a $15,000 loss that carries forward and offsets future income. Both tools apply to what the IRS calls qualifying property. For freelancers, this typically includes computers and laptops, cameras and video equipment, microphones and recording gear, software, machinery, office furniture and equipment, and some vehicles. The business use requirement is critical. For Section 179 and bonus depreciation to apply, you must use the asset more than 50% for business. If you buy a laptop and use it 60% for business and 40% personally, you can only apply Section 179 or bonus depreciation to 60% of the cost. And if business use drops below 50% in a later year, you may face depreciation recapture. Vehicles have special rules. Passenger vehicles used for business are subject to annual luxury auto depreciation limits, regardless of whether you use Section 179 or bonus depreciation. These limits apply even if the vehicle qualifies. Heavier vehicles, SUVs over 6,000 pounds gross vehicle weight, are subject to a separate $30,500 Section 179 limit for 2026. This is why some business owners specifically seek out heavier vehicles. But this is an area where the rules get detailed quickly. Work with your CPA. Software follows similar rules. Off-the-shelf software that you purchase outright qualifies for Section 179 and bonus depreciation. Software that is developed internally or licensed as a subscription is treated differently. Here is a strategic approach for 2026. Use Section 179 first to write off as much as possible up to your taxable income. Then apply bonus depreciation on any remaining basis if you have more property costs than your income allows under Section 179. Bonus depreciation picks up where Section 179 leaves off and can carry losses forward. This strategy is most powerful when timed correctly. If you know you are having a high-income year, that is the year to accelerate equipment purchases. Buy the camera, upgrade the workstation, invest in the software you need. You can potentially offset thousands of dollars in income that would otherwise be taxed. You report all of this on Form 4562. This form is where you elect Section 179, calculate bonus depreciation, and detail your regular depreciation on assets not fully expensed. Your tax software or CPA will handle this, but understanding the form helps you know what elections are being made on your behalf. Now, a word on depreciation recapture. If you sell or dispose of an asset you fully expensed under Section 179 or bonus depreciation, the IRS may require you to recapture some or all of that deduction as ordinary income. The recapture applies to the extent the asset's sale price or value exceeds its adjusted basis. If you wrote off a $3,000 camera in year 1 and sell it for $1,500 2 years later, you could face $1,500 in recapture income. This is not a reason to avoid the deduction. It almost always makes financial sense to take the deduction now and deal with recapture later if and when it comes up. But you should know it exists. Here is your practical checklist. First, keep records of every business asset you purchase: receipt, purchase date, business purpose, and percentage of business use. Second, track business use percentages for listed property like computers and cameras. A usage log or your calendar showing business activity is your documentation. Third, discuss timing with your CPA before year end. If you are close to buying equipment, consider whether buying it before December 31st gives you a meaningful deduction this year. Fourth, do not forget software. Both annual software subscriptions and one-time purchases qualify for deduction, though the rules differ slightly. The bottom line? If you are buying equipment for your freelance business and you are not using Section 179 or bonus depreciation, you are leaving money on the table. These tools exist specifically to help business owners invest in their operations without carrying the full tax burden of those investments. Subscribe for more tax strategies designed for freelancers and self-employed professionals. See you in the next video.